it is show time, guys. Happy Monday. Welcome to Dallas Monday's Market Update. And I'm super excited to give you guys the housing update. So last week I was on a 7-day sabbatical, so I did not jump on. But today I'm going to make it very short and sweet. And then I have a special guest for you guys, David Dunaway, one of my go-to commercial real estate agents. And I like him to come on at least once a month and kind of tell us what is the commercial real estate, you know, space feeling like right now. And so he will jump on and he will explain all the things. But I wanted to talk to my sellers and my buyers for residential really quick. Like I said, it's going to be short and then we'll give him the floor. So, one, sellers, let me tell you this. Inventory is starting to stack up, which is beautiful. We have been in a seller's market and now we are trickling slowly into a balanced market, which is beautiful. But this also means that you have to price your property right, especially if you have to move. I know you hear me say week after week after week that you don't want to chase the market. You want the market to chase you. So make sure that, of course, I trust that you will use me as your real estate agent when you're listing your property. But if you're not, make sure that you're actually pricing your home correctly. You do not want to overprice your house or test the market, because where we are in the market, interest rates have gone lower, which is great for buyers, but it has not significantly dropped how we would have thought it would by now. So that's for my sellers. Price your property right. Now for my buyers, get off of the fence. Okay. So I don't know if, we need to have pigs fly or what exactly, but get off of the fence. Interest rates have dropped 3 Thursdays ago, the biggest drop in 5 months. So if you're saying, hey, I want my interest rate to be closer to a 6, it is a 6.8 right now. So, dude, if that is you, there's so much opportunity to be had. So for all of my buyers, what I have been telling a lot of my clients is the opportunity right now is in new construction. And yes, you do need a real estate agent when it comes to new construction, because you don't know all of the hidden fees or things that they try to roll into the price. So you want to make sure that you have someone advocating for you. Remember, when you are working with a sales rep for a builder, they are not representing you. They are representing the builder. So if anything ever went sideways, they would be saying ta-ta to you and trying to help out the builder. So just be mindful of that. So that is my quick residential real estate market update. Like I said, we are going into a balanced market, which is beautiful for both parties. And Jake, of course, wants to say hi because he loves to jump on anytime I'm on social media. And no, I'm not going to get him a social media page. It's already a lot keeping up with the ones that I have. So I'm going to be quiet now. I'm going to bring on David and I'm going to have him tell you a little bit about him, how long he's been in commercial. I also, if you're watching this on YouTube, I have all his information. So if you are someone who is looking to get into the commercial space, either for being a realtor in the commercial space or actually trying to rent or buy something commercial space, he is your go-to. So let's welcome David. Let me make sure. Okay. Hello, David.
Hello, Keyra. How are you?
I am excellent. Thank you so much for coming on and blessing us with your wisdom.
Yes. Well, welcome back from sabbatical.
Thank you. I feel so
recharged. Good for you.
Thank you.
Good. And the weather's great in Dallas, so welcome home.
Right. Well, I stayed here. It was a staycation. So
nice.
Yeah, so it was nice. But yes, so David, tell us a little bit about you, how long you've been in the commercial space, and how people can contact you if they have any questions.
Okay. I have been in commercial real estate for 5 years. 5 years next month is my anniversary. I came from the technology world. I was in sales forever with Hewlett-Packard, Cisco, some large technology companies like that, ending up in the cybersecurity space. So that was very interesting, but I can say commercial real estate is a lot more fun. So love the KW Energy, the Keller Williams team, folks like you and the others at KW Urban. So really enjoyed it.
Right. I tell people all the time, I love real estate. It is very fun because everything is always so different. It's like a blessing and a curse that everything's
Mhm.
different, but
Yeah.
I enjoy it as well. So,
hmm Never a dull moment, and I'm just constantly learning. Every deal is different, and you would think that the technology and cybersecurity world would be more interesting than real estate, but I think it's the opposite. But anyway, buy me a cup of coffee. We'll fill you in on the details. And I don't know, my need to give my number and my email address.
sure. Yeah. Because I
Okay.
have that on YouTube, but we're
Okay.
on Instagram, we're on LinkedIn, we're on all the platforms right now. So
Yeah,
go ahead.
972-679-9845. You can text me or call. Once again, 972-679-9845. That's a good way to reach me. So we're going to talk today about the office market, office buildings, commercial office space. And refreshing your memory, we talked about industrial last month, which is industrial or flex. That market's really doing pretty well, probably single digit, 7 to 9% vacancy rate in the Dallas-Fort Worth area. The exception being down in southern Dallas, Lancaster area. There's some larger spaces, 100, 200,000 square feet. They overbuilt a little bit down there. But in general, industrial is very strong right now. What is not as strong is the office space. And you who watch the news, read the newspaper, et cetera, read the stories of the commercial real estate market is way down, the spiral, the crisis is coming, et cetera. What they're really talking about is the office market. And it's kind of interesting to me because that's only about 15% of the total market, but it's obviously a very visible part if you see empty office buildings. And I think we've all seen that at our old building down there on Maple. There were several floors very vacant. Keyra, I don't know if you walked around. I did a lease last year in downtown Dallas. It was a 12-story building, and the top floor had been vacant for 20 years. That gives
20 years?
kind of a spooky feel, like the Addams Family or, Ghostbusters up there or something. I didn't go up on that space, but they're pretty incented to get it leased. And you can imagine, even if you're a REIT, a very large investor, you have vacancies like that, the national vacancies, 20, 25%, depending on the location. But that's really going to hurt your equity return and your cash flow. I don't care how big you are. So we've got some pretty high vacancy rates. Good news is if you're a tenant, you can find space in the Dallas area pretty easily. We did a number of leases last year. And what is really hot right now is what they call spec office. This is where the landlord will go ahead and finish out an office. You need 1,000 square feet, 2,000, 10,000. You can basically just walk in and be ready to go very quickly. I had one small company that was literally, he started his search on Monday and he was in the space by the end of the week. So that's how quick you can move. One of them wanted a different logo on the door. They, painted on the glass door a logo, but typically you're not moving walls. You're not doing much changes. You just walk in, here's your offices, here's your conference rooms, et cetera. So spec office is really good. So if you need office space right now, you're growing your business, this is a pretty good time to be
Also,
looking.
I referred you someone, I think it was Kenneth, and did he do a spec space or did he have it?
Yes. Mm-hmm.
Okay.
Yeah, definitely. That was, I think that was the one that was a really quick one. Yeah, Ken. Yeah. So he was in about 3 days. He needed to be in fast. We see a lot of tenants who either the building was sold or they lost their lease and they need to move quickly. So right now is a good time to be doing that. And then, of course, if you're a larger company, a big branch office or a big, more Fortune 500, you may need 50 or 100,000 square feet. There's still a lot of vacancy out there for that, but that'll typically come with some tenant improvements, some construction time, et cetera. So we've got some high vacancy rates. A lot of this has been driven by COVID. We had the work from home wave. I have a daughter who just refuses to go into an office. She really likes working out of the house. I think that's pretty common these days. So that has driven a decline in property values. And it depends on where you're looking, 12 to 50% decrease in some values. Had lunch the other day with an office broker. He had originally listed a building for 19 million up in Richardson. It sold for 6.5. So
Wow.
Some pretty good discounts. Now, that investor's buying in a real tough market right now, but the people that make a lot of money, they buy when there's blood in the streets. So I think we have blood in the streets right now. Sorry for the metaphor. And I was listening to a guy who's done a lot of development on the tollway, many of those buildings you drive by. He's expecting to buy at a 13% cap rate, which is the return on investment. So you're going in monthly returns. So in industrial, you're probably 6 or 7% cap rate. He thinks he can buy an office at 13. So that's just saying the price is down as the income goes up.
So I have a question for you.
Mm-hmm.
Do you believe, because I've started to see this, do you believe that a lot of the workspace offices that are not already like built out, because that seems like that's more of the favorable ones to go with, the
Mm-hmm.
ones that are like a shell, do you think that they'll turn those more into residential because we have so many people moving here? Like in
Yes.
Arlington, the global what was it, Rangers old stadium, they're turning
Mm-hmm.
that into all residential. And
Yes.
I even believe the mall, there's so many malls that have been going into foreclosures that they're
Yeah.
going to start turning into residential. I know that that's not really workspace, but could you talk a little bit about that too? And
Yeah.
what's causing that besides, I guess
That.
everything is COVID, you know?
Yes. I still use that as an excuse. So
Yeah.
yes, that's reuse where they're converting the building. Residential is the most common, at least that you hear about. They're also converting to self-storage and some other uses like that. I've heard that nationwide, maybe 15% of the office buildings will be converted to residential. The challenge is the way a building is designed for residential versus office is different, mainly with the lighting needed. So for an apartment, you typically want a window in every room. You don't really like bedrooms with no windows, no light, no natural light. So I saw a article that showed what the buildings in the 50s and 60s used to be. They had a lot of angles to them, sort of like this. I'm not doing it very well, but they were to let light into the offices. And then in the 70s, we started building these giant floor plates that didn't have windows or offices close to the windows, big fluorescent lights. So they have to work real hard for lighting in there. They also, if you think of the bathrooms in an office building, it may just be one set of bathrooms per floor. In a residential building, you need every apartment needs at least one bathroom. So there's a lot of plumbing issues. So you're taking up about 18 inches of the floor or the height of the building, height of the apartment with plumbing in a lot of these buildings. So bottom line is happening. There are some buildings they think just can't be converted. The people that really understand that process, I heard a podcast by a guy in New York that really knows what he's doing. He can just walk in and within a few minutes tell if a building can be converted. But yes, it's happening, and that's going to continue to be a trend, I think. And maybe some of them will get torn down. I mean, some of these are just not really good spaces anymore. They're going to be done, put to different use. We're seeing a flight to quality in the market. If you look at Uptown, that's very hot for new office construction. They are building some beautiful Class A office in Uptown Dallas. And then less than a mile away in southern downtown, there's just huge vacancy rates. So the tenants want to be in those really nice buildings. They want amenities, health clubs, balconies, restaurants, yoga rooms, whatever you happen to want. So the big law firms, the accounting firms and consulting firms, they're really gobbling up that uptown space. But then, like I say, just a few blocks away or a mile away is not doing near as well. So it's very geographical dependent in towns, cities, and then even within Dallas, the Dallas market has just a number of submarkets that are going different directions. So bottom line, it's a market that's in flux, but there's certainly opportunities. I really believe in the owner-occupied model. Like I say, if you're a doctor, an attorney, a lawyer, maybe a contractor, you buy that building and you sit in it, use it for 20 years in your business. Just sold last week, actually 2 weeks ago, an automotive building. He had run an automotive company, car repair, auto repair, for 30 years in that building and had just tremendous appreciation. So if you understand your business, you know that your business can continue, then you've got a very solid tenant. Maybe you're the only tenant, or maybe you rent the other couple of offices out, but that's just a very good model to build wealth, owner-occupied commercial. So that's kind of a quick update. It's exciting, never a dull moment.
I know, right? And I love the fact that you said in Uptown, they are really creating that opportunity. And since there is a lot of people, well, not a lot of people, a lot of opportunity, do you think that that's where are they wiggle on the price? So I feel like when it comes to commercial, people don't get like just the basic line of commercial. Do you mind like breaking it down? How is that lease different from just like a regular residential lease? I mean, if you want to go into the technical, you can.
Well, they're all triple net, and that has a base rent plus the triple nets are your costs that the landlord passes through. So it's in taxes, insurance, maintenance, what they call common area, the air conditioning and the lighting in the halls, the lighting, the striping of the parking lots, those kinds of things. That's part of the triple nets. And that's really typical for any modern office building. The other is a gross lease, which is more what an apartment would be, but that's where the landlord pays everything, but probably electricity. I'm sorry, the tenant pays one price except electricity typically. I say office leases, these small spec suites, you can do a year lease up. Larger office is typically going to be 5 to 7 year lease minimum. And then often a lot of tenant improvements. If you go into a real nice Fortune 500 office with nice signage and beautiful conference rooms, that's at least several $100,000 of tenant improvements and finish out. But the spec office is ready to go with no finish out.
Love it. Well, thank you so much, David. Is there anything else that you would want to leave us with? Or tell us what we're going to talk about for the next month? Because like I said, every month I have him come on and just update us in the commercial space since I talk so heavy on the residential. So yeah, do you want to leave us with anything else? Or
well, next month we're going to talk about retail, which is everything from small strip centers up to malls. And
awesome.
The main thing you need to remember is if you have any questions or have any needs in real estate, call Keyra, call me, and we'd love to talk to you.
Absolutely. And if you guys have any questions for residential for next month, because he comes on really every third Monday, please put it in our comments below because I want to make sure that we answer everyone's comments. So thank you guys until next time. And thank you, David. I appreciate it.
All right. Thank you.
Of course.